Hey traders, John Howell here. We're going to be looking at the stock market. I believe we're getting very close to having a capitulation bottom coming real soon in the stock market. I'm going to talk about that. And also I want to talk to you about what I believe, especially if you're in your 20s or you're in your 30s, what I believe is really, really, really important for you. So by the time you are in your 50s and your 60s, that you are set for life. And some things that I think is really important, and some of you may agree with this, some of you may disagree with this, but it's some things that I'm doing myself that I think is really important to your success overall in the market. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so make sure you grab that free trading course with the link in the description, and make sure you, as soon as you put your email address in to get that free trading course. Again, I used to charge for that course, but now I'm giving it away for free. And the 5 phases there, and especially the phase number 1 is all about the biggest mistakes you're making right now and how to overcome them so you can actually move forward. So if you're losing a lot of money right now and you're struggling with the markets, phase number 1 is really going to help you, right? And then we get into chart reading, the trading systems, the mindset. I even give you a 97% off access to my inner circle coaching program as well, too, to help you out if you actually want the coaching. If you don't want the coaching, that's okay. You still get access to the actual trading course. So I'm really doing this because I really want to help you out when it comes to this here. So again, I used to charge for the course, but I'm giving this away for free because I really want to help you. So looking at the stock market, and then I want to get into what I was talking about before. So looking at the actual stock market right now, I can see we're looking at the S&P 500, and we can see that we're sort of hovering around this you can see this is the 20 moving average, and we're trending down very, 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 very strongly through here, right? High, lower high, and another lower high through here. So I honestly do believe that we're getting very, very close to a bit of a capitulation bottom through here. And hear me out here, okay? Hear me out, guys. I know that sounds pretty crazy, but when do bottoms start to form in markets, right? When things just seem so bearish and so bad. And we just look through history. Now, if you're in the moment of right now, or if you're short right now, like, no, John, the market's going to go down to 0. You're wrong. And that's some of my private clients, they say to me, John, what's going on with XYZ stock? Where's it likely to go to? I'm like, well, there's good support at 0. Right? It's like, but on an all serious note, guys, I really do see that we're probably likely to get a bit of a capitulation mode, because things are just so bearish right now, right? Things are just so bad right now. Everything is so bearish about these markets, the interest rates, the inflation, and all this sort of stuff. And there's going to be a turning point coming soon. Now, coming soon, what I mean by that, over the next, say, 3 months, maybe 6 months, somewhere around about there. Like, we don't know exactly when the exact bottom's going to be, but I believe we're going to see a big capitulation on the downside coming real soon. And that capitulation is then going to then see probably a bit of a bottom in the markets through there. So that's what I'm seeing through there. I'm just seeing that things are just too bearish in the markets, right? And the market's the opposite. And the market will why is the market going up, right? It's like with the whole CPI announcement that came out last week. It's like the CPI came out last week, and then, oh my goodness, worse than expected. The market crashed, and the market went down, and then the market rallied. It's like, that doesn't make sense, right? So the big thing about the market is that the market sees things before we see things. And I'm going to say that again. The market sees things before we see things. The market's always forward-looking, right? So if the market sees that inflation is likely to peak and start to come down, which I do believe is going to, and that's actually a big factor and reason why stocks are coming down through here, right? It's just not interest rates, but it's other factors. If the stock market does start to see things before we actually see things, aka if the stock market's starting to see now inflation is peaking and coming down, we're probably going to start to see a bit of a bottoming coming soon. So looking at the actual S&P 500, I can really see that we're at this level through here, and we could actually, we could get a bit of a capitulation down towards, around that 3,000, maybe 3,200, 3,200. Sort of that 3,000 to 3,200 level. Looking at the Nasdaq, the big thing about the Nasdaq, and you can see sort of X marks the spot. We're in this sort of channel right now, so I wouldn't be too surprised to see the Nasdaq get back down towards this bottom of this other side of the bottom of the channel. I'm laughing because every time I say that now, it's like it's get to the bottom of the channel. Instantly, I think I should say a number, right? I should say a number because there was a comment there the other day on my YouTube videos. And there was a comment there that said, John, you've got it. What's the number? What is the number on the chart? Because sometimes we're not watching your videos. We're listening to it in the car or we're feeding the cat. I'm like, you obviously watching your video because you're trying to learn and you might be feeding the cat. Where's our priorities? Is it a priority that you actually want to do well from trading? Or is this like a bit of a gimmick to you, right? A bit of a fun for you? Right? If it's a bit of a fun, a bit of a thing that I can understand, right? But where is that? Where's the seriousness all here, right? Like, stop major and minor things, okay? If trading is for you, then let's actually zone in on it. Let's actually really put a lot of focus into this and getting it right. Don't be driving the car and listening to a video that I'm doing because I'm a technical analyst, right? I'm showing you patterns, I'm showing you charts, I'm showing you things. Watch the videos. Don't, I might be feeding the cat. Oh, watch for the bumblebee. The bumblebee is coming through the window. Quick, get it. So, so looking at the Nasdaq does look like it's about the. Actually, the big thing about the Nasdaq is one thing I do see is there's these other trend lines that are coming through. You can see here on the Nasdaq, we've actually got this bottom trend line. So, around about that sort of 9,000 level, I would have to say, possibly. There's a bit of support level through there, but there's not much through there. I'd have to say possibly even somewhere through there, but this whole 9 to 8,000 level through here is definitely a really big, as you can see, it's a massive conjunction of a lot of support lines coming into play. So to me, the Nasdaq's probably going to get down towards that 9,000 level, looking at that through there. So that's what I see through there, guys, and what I'm seeing happening through there on the Nasdaq and the stock market and so on and so forth. So I want to give you that's a bit of a finish, guys, on the technical analysis side of things and what I'm seeing through there. Just a quick little update on gold for you guys that are interested in gold. Gold, as you can see, look at this here, gold completely. Let me take off the moving average here for a minute, right? And as you can see, gold actually came up to this resistance level. It was support came down, now came up, resistance, and now came back down. So there's a very big probability now, we're looking at gold, there's a very big probability we're likely to see a lot more downside to come in this sort of region through here. So short term, there's a lot more bearishness coming in the markets, but long term, what I mean for the rest of this decade, that's actually going to be a really good segue into what I want to talk about here for a minute. Okay, so I'm not going to be looking at any charts now, guys, but I'm just going to be just talking about something through here, okay? And so stuff that's been on my mind this last weekend, coming into now, looking forward to this week here. So the first thing that's on my mind right now is that what I see happening. One thing that I think is really important is that we build a portfolio of not just short-term trades. One of the biggest mistakes that I made in all my 20s and even a lot of my 30s was that I wasn't building a long-term portfolio in the markets, right? And if we just look back through history, right, of obviously when was the best time to be buying the stock market? It was while the 2008 crash was happening, right? Because then the inflation happening, because then guess what? After 2008 became 2009, 10, 11, 12, 13, 14, and guess what? The market was much higher. We'll go through another crash, and the market's got to keep going up. Okay, so let's actually bring this back to say, I break this down into the metals and miners and the stock market. The metals and miners are going to go through another big. We're going to go through another big boom. Okay, especially I do believe gold is probably going to be really probably 5 to 10,000 plus by the end of this decade. How it actually gets there, I don't know when the bottom's going to be. Short-term analysis is different. So the whole thing about that is that, and also with the mining sector, I really do believe we're going to see an incredible boom, this mining sector here. The thing that I do say about what I just said there is that these things take time, right? Everything takes time, and we've got to be patient. We've got to be this sort of scenario is looking at the long game, okay? Where are we likely to be in 10 and 20 years from now and 30 years from now? You know, like really looking at that long game, and then taking a portion of your funds, even if it's a small portion, and start to create a separate account of just putting, you know, call it the 2050 account. You know what I mean? And what is that? That's where, okay, I'm putting this here, and I don't care what happens to this account, and this is for 2050. And that's John, 2050, are you nuts? Now, even if you're 60 years of age, right? Even if you're 50 years of age, right? 60, 70, 80, like you'll be 80. A lot of us are going to live to 80 years of age. We do realize that, right? 80 and 90. We're actually living longer and longer and longer. And now as things start to come out, right? If you read and listen or either listen to the audiobook Life Force from Tony Robbins, like our life expectancy is actually getting longer and longer and longer. So most of us will live to 70 and 80 years of age, right? I do believe that. So even if you're 50, you still have another good 30, 40 years left, right? You're 60, you still got probably another, you know. So we're living longer and longer and longer, right? So one thing I think is important, one of the biggest mistakes that I've made is always looking at the short game, as in like, I'm looking for a trade now and I'm looking to make a profit now. And not saying, you know what, I'm looking to take a portion of my funds today, and instead of going to buy that Big Mac meal, I'm going to go and buy, you know, a gold mining stock or whatever, right? So on the short term, over the next 10 years, I really do see that we're going to go through an incredible mining boom. We're talking 5, 6, 700%, okay? That's where I have a portfolio right now in the mining sector and in gold for that long term. So I'm actually in gold right now, and I'm actually in the mining sector right now, right? As this is pulling back, but I'm not really caring about that, right? Because there's a long-term sort of scenario through there. I hope that makes sense what I'm saying through there. So over the next 10 years, I see an incredible boom happening in the gold and the mining sector. Now, let's actually bring this over now through to the stock market and the big picture with the stock market, especially if you're in your 20s, right? In the 20s and you're just new to the whole stock market analysis. Just think about this for a minute, okay? Just think about this. If you look at through the last 100 years, right? The last 100 years. And I know the fear and the greed, and we can focus so much on the now, and it's so hard, right? Because especially when I was in my 20s, it's like, oh man, that was a big mistake that I made through there. If we ever look at the stock market, I believe, and I honestly do believe, that the stock market is going to be much, 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 much higher over the next 10, 20, 30, 40 years, right? Just look at the evolution of our companies that's happened over that time frame. If we look at the Dow Jones and so on and so forth, the Dow Jones has kept getting better and better and better and better, and overall, right? Now, overall, right, we are going to have, we are going to have probably maybe 5 or 10 years of maybe flatness in the markets, right? Or we may not. We just never know. But the whole purpose of me saying this is that if I had to look at from now through to 2050, right, 50 years from now, or 30 years from now. Is that 30 years? 20, 30, 40, 50. Yeah, I think it's 30 years. I think. I can't do math. So the whole thing about that is that if you ever look at the evolution of our companies, right, our companies are getting bigger and bigger and bigger. Think about this for a minute, okay? Even if crypto is going to be the next big thing in the markets, guess what? There's going to be a lot of cryptocurrencies, and guess what? They're going to be in the S&P 500. So the S&P 500 and the Dow Jones are always going to continue probably making much, much, much higher legs in the markets. Overall, this is right. And as we go through our crashes and booms and crashes and booms and crashes and booms, overall, we're going to see that cycle of that. And we're probably likely to see much, much, much higher prices in the markets. Because if you look at the evolution, right, like we've now got $1 trillion companies, in the markets, or maybe not now because of the market pullback, but $1 trillion companies, right? Like I don't know about you, but I'm in my late 30s right now, and I'm, and I think about even when I was younger, right? To think about $1 trillion, like the trillion dollars wasn't even a word 20 years ago, 30 years ago. Like no one said trillion at all. People just throw it. Like my kids right now, my kids are 11, 14 and 15. And they're talking about millions of dollars like it's just nothing. Right? It's like, oh, nothing. I see how like, oh, this cost me, because now they play Fortnite, right? It's like, oh, this cost me 10 million Fortnite coins. That's right. Like the $1 million, it doesn't even seem like a lot of money these days. You know what I mean? So the whole purpose of this evolution is that, you know, when we talk about $1 trillion company, come 2050, and guess what? 2050 is coming. And 2050 is going to be here before we know it. Like it is coming. 2030 is going to be here before we know it. I had lunch yesterday with my pastor, with my friend, who's also a pastor of a church, right? And he's 50 years of age. And he's like, oh my goodness, I have just over 14 years left before I retire. And I was telling him, don't think about the word retire about like that. But the whole purpose of saying that, right? Like if we look at our lives, like he's 50, I know I'm going to be 50 soon, right? And it's like, so what am I doing now for my what am I doing now for my 50-year-old self, right? And so, so it's important that I think that it's important that the long game, right? The long game. If you look at Warren Buffett, why has Warren Buffett been so successful? Because he plays the long game, right? He's not playing the short game or the long game. Now, yes, that's a blatant statement through there, right? Just looking at the Dow Jones, you know, I see the Dow Jones being in the hundreds of thousands, you know, by 2040 or by 2050 or whatever. We're probably going to see a couple of 100,000 Dow. People are just going to say, John, you're nuts. It's not going to happen. Look what's going on in the economy. Again, you're short-term thinking. This is not what's happening right now, right? Look through evolution of the history of the markets, economies, you know, and the way that we've actually grown, with the way the stock market has actually grown. And you sit back and you think, when were always the best times to get involved with the markets, right? It was again, if you look back, what was it, you know, you know, 1929 stock market crash. When was the best time to buy it? 1930, right? 1987 crash. When was the time to buy it? After the crash. You know, so on and so forth. So this, and remember, this is not about you trying to pick the bottom, right? This is not about you saying, oh, I'm trying to get in now. This is about you saying, I'm getting in these positions now, like I am, especially when it comes to gold and the mining sector, because I'm really confident come 2030 that we're going to be seeing much higher prices. And I'm not here to time the market. I'm just I just want to be part of it when that actually does happen, because no one knows when it's going to happen. I'm very confident, like in the mining sector and the gold, we're going to see an incredible boom, but no one knows exactly when it's going to happen. So I just want to make sure that, like because that's what we do, right? We look at Ray Dalio, we look at all these YouTubes because we're trying to find the exact bottom when's the exact bottom in the market. It's like no one knows, no one can pick the exact bottom. But you don't need to pick the exact bottom to make a lot of money, right? Because we think, oh, I need to find the exact bottom so I can make a lot of money. Like, no, you don't need to find the exact bottom, right? Let me ask you a question. Gold right now is like what? 1,600 and call it 50, right? Call it even. What if then you fast forward to 2030 and gold's at 10,000? Did it matter if you bought gold at 1,600 and then it went down to 1,500 and then it went back up and then it went up to 5,000? Did it matter? No, right? Did it matter if you bought stocks in the middle of 2008 while the crash was happening? No. 10 years later, you've done well. See what I'm saying through there? So even though I'm a very short-term trader and I have short-term systems when I'm trading, I think it's really important that you set systems up and accounts up, even on a short-term base, even just something small, even if it's 5% of your pay. You know, if just maybe 5%, just something really small, and say, you know what, this is nothing big, but it's going to compound, right? Because it will compound. I look at my life insurance that I'm paying right now, and I didn't realize just how much, but over the 10 years, I spent over $10,000 on my life insurance, and it just keeps coming out every single month. What about if you just set something up like that yourself, right? So every single month, you know, even $100 comes out of your account. $100 comes out of your account and goes into this other account, and then you go buy some stocks with it, or you go buy the S&P or some gold or whatever, right? And then you say, this is the 2030 fund account, or this is the 2050 fund account. And you then just do that and then just put that aside, right? You're not taking all your money, you're just taking a small portion and then you're putting it aside. And so that's what I like to see what your thoughts are below in the comment section about two different main things here. One, I believe gold and the mining sector are going to be huge, especially when we get towards the end of this decade, around the 2030, when we are going to see a dollar crisis. We are going to see the government default. In between that, though, we're going to see the government go through another round of QE. It's going to come. But when the dollar crisis does happen, gold is going to shoot to the moon, right? We just don't know when that's going to happen. I believe it's more the second half of this decade that things are really going to get heated up in the mining sector and gold. But who knows? That's just me guessing. And then also from an evolution point of view, I see the Dow and the S&P much higher because the value of our companies are going to keep getting bigger and bigger and bigger over the decades as they unfold. So anyway, guys, leave a comment in the section below. I'd love to see what your thoughts are about what I just said.